attempt to be 100% transparent, in this video, we're going to do a year-over-year review of my $130,898 dividend stock portfolio. We're going to go take a look at each individual account, see how the dividends have performed, where they are projected to go. And ladies and gentlemen, I look so forward to breaking all this down for you. So let's just jump right into it. Welcome back, passive income investors alike. So before we head over to the actual accounts, I want to show you the year-over-year look of how my portfolios have been growing with the combination of capital gains, dividends, including the money I've been contributing to these accounts. And then at the end of this, we're going to come back and we're going to take a look at my own 2020 goals. So let's get on into this, guys, and take a look at the first chart. So welcome to my board that I wake up to every morning and get to remind myself of how my performance is doing with the combined accounts from capital gains, dividends, including contributions to each individual account. I really like looking at this on a regular basis because it always keeps this in the back of my mind. And we're going to be analyzing mainly the top part of this graph. But the first thing we're going to take a look at is we're going to go all the way back to 2017. And I'm super glad I took the time to actually write down what was causing the portfolio to move. And we can see in as early of 2017 here, we were taking a look that I had to buy a car, which comes back to cars are stupid expensive, and it held my account down. But during this time, I also owned Canopy Growth Corp. So it turned out that worked out pretty well, and it took my account up a whopping 52.44% for the year of 2017. Now moving into 2018, we can see we had the market drop. I also sold out of Canopy at this point, and then basically a whole lot of nothing happened in 2018, which we'll see when we go take a look at the actual charting of the performance growth of the individual accounts. But in the overall growth with everything combined, I actually had some decent growth just because I was adding a lot of capital. And if we come down, I actually mark how much capital income I was having versus expense, obviously the red line being the expense. And 2018 was a super awesome year, whereas we can see 2019 is a little bit choppy, but we'll get to that in a sec. But in 2018, guys, I was able to contribute just enough. So I mean, other income and dividends grew my account a substantial 23.32%, and we had a dividend change of 54.35% because it was back there where I started tracking my dividends. So moving forward, now we can see going into the beginning of 2019, we had a little bit of a dip starting the whole thing off, and plus I went on a Vegas trip, which kind of fluctuated the whole portfolio. But taking a look, it's been a relatively choppy year this year, which we're also going to see in the performance of the accounts. But taking a look, guys, we had Trump, tariff wars, I had to pay a bunch of taxes early in the day there, and we've had like a lot of different stuff going on. My dividends have been really choppy because I've been moving capital around. And if we take a scroll down, we can take a look that this year started with 104,000, and we're obviously at the end of the year with 130,898. And we can see how choppy the income has been this year, as this year does not look anything like 2018, which is very unfortunate. But luckily, we've still had a 25.71% growth, actually a little bit more than the year prior on the capital gain aspect of things and the combination of dividends and contributions. And then the dividend has actually grown by 50.48%. I wanted to balance the portfolio out. So going into the end of the year here, we can see a bit of a drop, and that's just because I wanted some things like Tesla in my portfolio. I didn't want 100% focused on dividends just because I don't plan on utilizing these dividends just yet. I'd still like to see some good growth in companies like Apple, Microsoft. And you know what, in light of that, how about we just head on over and take a look at all of the individual accounts that I have been tracking. Before we do a deep breakdown and analysis of the combined charting of these accounts, I would like to do a brief overview just to show you guys where we're starting 2020. So jumping into the tax-free savings account, which is my favorite account of all time because all the money and dividends made in this account are 100% tax-free. We've had some capital gains of $13,969, which doesn't fully equate to the max amount of capital gains because I've taken some and I moved them around into other positions. Considering the max amount you can add to this account, I think is $69,500 as of today, and we're sitting on $97,000, which I mean is well over a $20,000 capital gain. Actually getting pretty close to about $30,000 in capital gains within this account and dividends combined. Now I have set money aside to recontribute, which is sitting in my managed account, which I'll talk about in a second, as I just sold some of my positions to start the transfer. But taking a quick look, obviously some of the best performers this specific year have obviously been Apple, up 72% as of today, and we're talking Microsoft up another 54%. I will do a deeper breakdown in the future of what stocks I will be spending that $6,000 on, but for sake of convenience, let's just take a look at the dividends and where we sit as of this moment. Currently, as of 2019, we have had 2,613 Canadian dollars paid out in dividends this year, and another 620 USDs. Now, going into 2020, we are projected to make 840 USDs and 1,921 Canadian dollars. But as soon as I contribute that 6,000, my goal is to get the US up over 2,000 and the Canadian up over 2,000. So I'm making a direct even break between Canadian and USDs, but obviously living in Canada, those USDs are worth a lot more. As we know, if you take 1,840 and do the conversion, you're probably looking somewhere around 2,300 CAD. But I like having an even dispersion to help my travels out in the future. And some of my best dividend performers as it sits today, I honestly have to say would be Apple and Microsoft. Because I picked these up at such a good share price, we're seeing almost a 2% rate of return, which is double pretty much what they are offering as of this moment. And some of the ones that are going to be projected to do amazing, obviously, are my more recent purchases like BTI and MO. Now, taking a look at the other accounts, the one that we're not going to do too much of a briefing on is my managed account, which is not a tax advantaged account. And this is where I usually park money, where I decide what I'm going to do with it over a certain period of time, as I also have to pay taxes, and I kind of use this account as just a place for more liquid moving money. And currently this account did pretty well this year, considering we've seen a rate of return of $921 in Canadian dollars as of 2019. And obviously into the future, we're probably not going to be making that much, because this account is just a constant account where money's getting moved quite a lot. But moving into the more important account that'll be here for a while is my RRSP, my registered retirement savings plan. And as I've talked about in the past, this account I am going to be drawing money out of long before retirement, but I'll do it in a way that will mitigate all my risk and costs, and it'll only ever be the capital gains and dividends. But we're a long ways from that. So in the meantime, while I build this portfolio out, we can see we're doing quite substantially well in this portfolio, considering Tesla's up 27%. We got J&J and then my VFV. And a little heads up on a future video you might see is I'm probably going to be liquidating VFV. And I know this is kind of a little shocker to most people, and I'm going to explain to you why. So consider subscribing and slapping a like if you want to see how I continue to manage these combined six-figure accounts here. So taking a look at the dividends in this guy, as it's more recent, we've only got $16.25 US dollars as of 2019. But moving forward, we're going to try and get this dividend up quite a little bit more and hopefully see a little bit more growth. But taking a look, guys, not terrible considering we picked up J&J at a very decent price of $133, almost giving me a 3% dividend yield. Now, taking a look at the charts and coming back to the combined performance, let's start with the easier to understand, which is just the basic charting here, going all the way back to September of 2014. These accounts have officially been out for about five years and 3 months since I started the exact date, which goes back again, I don't know what date, but it was some day in September of 2014. And we can see, guys, that the performance in the beginning was rough and rocky, but we made some good decisions. Things worked out. And we can see as of to date, basically the little blue line represents my tax-free savings account. The orange line represents my cash account, which is the managed account. And then the dotted green line represents the S&P 500, which is the basic benchmark that we all compare ourselves to. And then finally, the RRSP account, which is the black line. And then I added a little bit of an extra one, which is the S&P TSX, because I live in Canada and the TSX sucks. It's a good understanding to see how easy it is to outperform the Canadian indices. So taking a look at the performance, though, it looks as though the tax-free savings account is up 89.48%. The cash managed account is up 72.36%, and the RRSP account is up 27.52%. Now, the thing to best understand here is the time frame between each one of these accounts. Now, the orange account obviously represents the longest term performance I've had, but the problem is because money moves in and out of this account so much, we've had almost a complete year of flat line, which we're probably going to experience again up here because I'm taking all the money out of the account. as I usually put it into the more tax-advantaged accounts. So it's hard to gauge, but considering over the last 5 years, we've seen 72.36%, well, that represents a hell of a lot better than the basic rate of return from the S&P, even considering we had a complete year of flatline with no rate of return. Now, the tax-free savings account has literally only been around for just over 2 years, and it's seen already a rate of return of 89%. So, I mean, in a 2-year gap, that is kind of absurd considering you're over 5 years, it would be a 20% rate of return to get to that 100%. But if we can get to that 100% in this TFSA over the next year, I mean, we're going to be seeing a really healthy 30 to 40% rate of return. And I mean, even taking a look at the RSP account in the black line, we're seeing a 27.52% rate of return with the combination of a lot of good things, including the dividends, capital gains, and probably money I'm saving on taxes. So this is absolutely intense to take a look at. I mean, it boggles my mind to see how conveniently I've been able to outperform the market, and I'm trying not to let it go to my head because, I mean, the market could turn around at any given point in time. But like I said, for as long as I continue to outperform the market, I will continue to make these videos and I will continue to try and educate you guys. So moving into the final chart that I wanted to show you guys, and the reason I like this chart so much is because it kind of shows where my performance in each of these accounts has outperformed the market and underperformed the market. And we can see in the early days of 2014, my cash account was a nightmare, considering there were periods and times where I would see almost a minus 12% loss, which you can take a look here, guys. So say in July of 2015, I had a 12.95% loss, whereas the basic indices only saw they've seen a gain of almost 2% or 1.97% back in the same time period. So in the early days, I was making a lot of poor decisions, but then we can see as we started to figure things out, we were actually making higher capital growth and gains than the actual S&P, and it looks like we've been able to sustain that. And there's been periods and times even where I have made less losses than the overall basic indices, which is pretty incredible to take a look at. Except there was one period clearly here back in, what are we looking at here? These months we're looking at May, June-ish of 2019, where I saw a much larger decline in my cash managed account. But I know the direct correlation was because of Tesla. I am a bit of an OG holder to Tesla at this point, with holding it over a year, and considering how rocky last year was for the entire Tesla stock, I mean, I'm glad that it's worked out now, considering, look at the RSP account where I dumped Tesla shares and bought a little bit more. We've seen a direct opposite in fluctuation to the top. But yeah, so this is a full breakdown, guys. Now let's go talk about the 2020 goals that I have.
Well, ladies and gentlemen, taking a look at my 2020 goals, I don't really ever set any, as I just try and focus on the day-to-day growth of my accounts and making sure I'm doing a minimum contribution of usually around $500 a month. But where my main focus is going to be in 2020 is on passive income sources. I have set aside an accumulative amount of time by quitting some jobs and some of the current business that I had to try and see if I could further extend my passive income, as I've recently exploded on the YouTube channel as I've finally been able to collect ad revenue. I launched a website with another YouTuber by the name of Matt Money that is also producing a healthy income. And when I ran the numbers, I am currently making, including the dividends from my stock portfolio, setting aside the capital gains, I'm looking at somewhere between $700 to $800 a month in pure passive income. And the reason that I'm trying to focus so heavily on this is I want to be able to travel and focus on a career where my income isn't nearly as stable. So what I would like to do is have a backup income that I can make anytime, anywhere. And as I continue to learn about the internet and the way the world is headed, and everything is basically headed online, I'm glad that I'm able to teach this to you guys and show you the variant points of my passive income sources. Consider slapping a like and subscribing. I would love to know what you all think and what your passive income sources are in the comments section below. In my next video, ladies and gentlemen, I'm going to be breaking down for you the entire outlook and the 1-year growth of my YouTube channel. So I hope you guys enjoy this video. Stay cool, stay awesome. I look forward to chatting to you real soon.